Hi everyone, it's Alex here at Cestrin Capital Research. Welcome to a very special webinar covering quantitative signal services. So whether you are a current subscriber to one or more of these services or you're just interested, welcome. Thanks for joining us today. This session will be recorded, and so if you have to drop off halfway through or you have friends, colleagues, family that you think would like to see it, we'll post the recording a couple of hours after the event. Now, all of our webinars we run on a live and open mic basis. So after I've read the disclaimer in a moment, we'll turn mics on. And if at any point during the session you have questions, comments, points to make, anything at all, things you agree with, disagree with, please open the mic and shout into the system. If you aren't able to use audio right now or you don't care to, then in the webinar platform here, there's the ability to ask questions and post comments. So please do use those alternatively. Topic of today's session is how to turn the signals that are produced by our various quantitative research services into trades. Sounds like a simple question. It's actually a bit more complicated in practice. And I have two perspectives on this. Obviously, I run the business that hosts these services that are produced by our super smart analysts. But I'm also a user of a number of these services, and so I can bring that perspective as well. So we're going to read a disclaimer in a moment, and then we'll get right into it. So let's do the disclaimer, which is on your screen right now. So disclaimer, this webinar is intended for US recipients only, and in particular is not directed at nor intended to be relied upon by any UK recipients. Any information or analysis in the webinar is not an offer to sell or the solicitation of an offer to buy any securities. Nothing in the webinar is intended to be investment advice, and nor should it be relied upon to make investment decisions. Cestrin Capital Research, its employees, agents, or affiliates, including the presenter of this webinar or related persons, may have a position in any stocks, securities, or financial instruments referenced in the webinar. Any opinions, analyses, or probabilities expressed in the webinar are those of the presenter as of the webinar's date of transmission and are subject to change without notice. Companies referenced in the webinar or their employees or affiliates may be customers of Cestrin Capital Research. Cestrin Capital Research values both its independence and transparency and does not believe this presents a material potential conflict of interest or impacts the content of its research or publications. Okay, so let's get back to our agenda and let's get mics switched on. So mics are on as of now. Okay, let's get going. So first of all, what is a signal service? You know, we market and sell a few of these now. And so I'd just like to walk through what we mean by this. So in our world and how we define things, there are basically three types of analysis for any liquid security. Fundamental analysis, you know, all liquid securities at some level have fundamentals beneath them. So that could be a simple company common stock, in which case the company is the issuer of that stock, and understanding what's happening with company valuations, financials, management interpretation, all those things has some bearing on the price. And so fundamental analysis of a single name stock would include an analysis of those things, and the output would be, for instance, an earnings report, comment on growth, margins, cash flow, balance sheet, all of that. Often, some opinion on how management is doing, qualitative assessment of the opportunities and challenges faced by the company, those sorts of things. And usually comes with some sort of price target or opinion as to whether the stock should be bought, sold, or held. Fundamentals also relevant, obviously, to bonds and other things that aren't simple company stocks. In the case of bonds, fundamental analysis pertains to the economy, government policy, central bank setups, and so on and so forth. So, in other words, fundamental analysis has to do with things in the real world. Technical analysis, which in my opinion, is generally more powerful than fundamentals. Fundamentals are a necessary but not sufficient basis upon which to invest and trade. And technicals, in truth, are also necessary but not sufficient. But you can, in fact, treat technicals as a complete trading system if you understand the limitations. And technical analysis is essentially a visual game. It's a way of looking at price and volume patterns on a visual chart, overlaying usually some mathematical constructs, be that Fibonacci levels or geometric patterns, those sorts of things. And the method, of course, is to look at price and volume pattern recognition and to use one's knowledge of pattern recognition as a price extrapolation method. No one's perfect, of course, but the better one gets as a technical analyst, the more pattern setups that you've seen, you understand how they might break to the upside, the downside, or just trend sideways. And whilst one is never ever going to get these things entirely right, more miles on the road, and frankly, some capital at work, at risk of one's own analysis, can lead you to be a pretty good technical analyst, even if you know absolutely nothing about the underlying company that's producing the stock, or nothing about the country that has issued the bond. Quantitative analysis is a further level of abstraction, in my opinion. And of course, we can argue about the definition of quantitative analysis, but for our purposes, how we think of it is machine-driven statistical analysis of price patterns. So the machine does not care about what Jensen Huang might be saying at the moment on the NVIDIA earnings call. The machine does not care about what somebody from the White House may or may not have tweeted 5 minutes before the NVIDIA earnings report. The machine doesn't know about these things. The machine also doesn't know about geometric representations of price patterns. It doesn't look at stock charts in the way that a human does. The machine just looks at statistical analysis of, for instance, price patterns, perhaps volume patterns, perhaps other patterns, but just raw data, raw statistical analysis. And it uses the analysis, again, for price extrapolation. So all these methods are designed to try and conjure up an image of the future, whereby using some kind of data, one hopes to get a fix on where price might be at some point in the future. And of course, by definition, none of these methods can be perfect. And in our work at Cestrian, and speaking for me personally as a long-standing professional investor, originally in leveraged buyouts and venture capital, but latterly in public securities, I use all three of these methods in roughly equal measure to determine my investing and trading activities. And I would not be without the signal services that we now offer. They're a tremendously powerful addition to the work that I do personally in my own investing, and also the work we offer here at Cestrian. Now, the signal services, and I'm going to talk you through in a moment. What's the output? Well, in all of them, they output a pretty simple thing, a 1 or a 0. And I'll walk you through a couple of the services in a moment. But a 1 represents risk on, and a 0 represents risk off. And again, that's quite an abstract concept, just stated like that. So I'm going to explain what we mean by that and how we intend for our members to use those signals. In essence, Cestrian hosted signal services, they're there to provide risk signals for you to use in your trading decisions. Risk signals to use in your decisions. Now, we offer two families of signal services today, and this is going to continue to expand over time. So on the left, we have the Signal Flow AI family of services. This is produced by Jay Bain, who's a professor of computer science, long-standing data scientist and statistician, has a PhD in the area. And we run a family of services all based off of similar types of model. A long-only S&P 500 service, long-only growth, which is a service that rotates through growth ETFs according to the most compelling idea it can come up with, a long-short service for the equity indices in the US, and a long-only bond ETF, which again is a rotation service. It picks from a handful of bond ETFs that it thinks are most appropriate. On the right, YXI, that's Yimin Zhu, who is a long-standing and tremendous analyst in our work here at Cestrian. Yimin's a professional rates trader by training, and since going independent and running his own money, produces a terrific macro service called YX Insights, which you can find on our website under the macro tab. And in the last 6 months, he too has started adding quantitative analysis to his work. So right now you can buy his Bitcoin service on a standalone basis, and pretty soon in the coming weeks you'll be able to buy a range of single stock signal services as well. And again, they run on the same basis. For all of these services, the outputs are 1 or 0. So in Jay's long only S&P 500 service, you get an output that says 1 or 0 on the S&P 500 at the close each day. Yimin publishes his signals before the open each day, and so for Bitcoin, you'll get a 1 or a 0. Okay. Now, here's some of the actual outputs. Now, on the left, this is the simplest of the signal flow services, which is a long-only SPY ETF service. And so each day at the close, the model spits out an opinion. And if it publishes a risk on, a one signal, then in essence, the model thinks that compared to holding cash, it's a better idea to hold the SPY ETF. And it thinks that because it's considered, based on the price and volume of one or two other inputs that it's looking at, volatility is a key part of the analysis. Does it believe that the S&P is about to enter a period of material weakness? Not, a little bit of a sell-off, but material weakness. And if it does, then the model will conclude actually owning SPY is a little bit risky, better in the model's opinion to hold cash. And so in that event, you'll get a zero. So I'm going to say February this year, the signal flow long SPY service went to risk off, and it missed all of the sell-off through March, April, all of that very, very successfully, because the model saw disturbances in the price pattern, rising volatility, and statistical data reminiscent of previous material corrections. On the right, this is actually an output. If you subscribe to the full YX Insight service, you get this every day, and soon some of these will sell on a standalone basis. But each day in the YX Insight service, you'll get an SPY signal, a QQQ signal, a Bitcoin, and I've blanked these out. It's unfair to YX Insight subscribers to share those all here, but I've left one open, the Bitcoin signal. So Bitcoin, Yimin's Bitcoin service has been at risk on for some time now and has achieved, I'm going to say, a 30+% run up since inception of the service. And one of the things I really like about quantitative analysis, and I'll quote Yimin himself here, is he said that Yimin is a pretty good fundamental and technical analyst, I can tell you. And on a couple of occasions, he said this quant service that he's created has stayed in Bitcoin when fundamental and technicals would have taken you out. Now, again, no analysis service is perfect, never going to be the case. But it's really interesting to me that a cold-eyed, completely emotionless machine system has not become spooked by the vertiginous ascent of Bitcoin up and out of the Liberation Day lows, and has just held. And again, if you look at any technical analysis of Bitcoin, one probably would have concluded this is a bit much. I think I'll step back. And on fundamentals, I don't know what the fundamentals of Bitcoin are. Money flows maybe, but the machine service has stayed in. So that's what the output looks like, and each of the services has some variation on this, but in essence, it's a 1 or a 0. And then this is the thing that I wanted to walk through. What action should one take when you get a signal? Well, in truth, it's not really any different to if you subscribe to any sort of investment research, fundamental analysis, where somebody will send you an earnings report and they'll say, I haven't seen NVIDIA numbers tonight, but let's say, NVIDIA printed a, great report and the guidance looks good and the stock's undervalued and, I, Mr. Analyst, think it's a buy. Okay, so that's a set of signals to you, right? That's a buy signal of an analyst that presumably you trust. Technical analysis does the same. If a technical analyst produces a chart and the chart projects the price to fall based on pattern recognition that the analyst, and presumably you as a subscriber, have some faith in, then you might look at that and say, well, okay, I think that price might fall too. Does that affect me? What am I going to do about it? And these quantitative signals are no different. They're designed so that you can, if you want to, simply take the risk signal and act linearly on them. So, for instance, if a Bitcoin signal comes out as 1 and you don't know any Bitcoin, well, you could buy some. And then the next day, if it comes out as 0, then you might sell it. So you could, of course, follow it directly. But even then, how you implement it depends on a number of factors. So first of all, it's really good to have a strategy as to what it is you're going to do with these signal services. So speaking for myself, I use a number of these as background risk analysis assessment. It's another layer of analysis over and above my own manual work that tells me, okay, what is a machine whose outputs and back tests and live trading I've had a fair degree of experience of and I have a reasonable degree of trust in, what does that machine say about the market environment right now? Bullish, bearish, neutral. Okay. Some of them I use directly. So again, the Bitcoin service, I've had tremendous success with Yimin's work on Bitcoin, both pre and post this quantitative service, and I traded directly based on his signals. That's worked out very well for me. I don't hold Bitcoin personally directly. I use the IBIT ETF, and that's worked pretty well. So one has to have a strategy for what is it I'm intending to do with these signals. Trade them directly, sort of look at it in the background and process that in the back of your mind somewhere, or somewhere in between. Then the question is, what positions do you already hold and in what allocation? So in a greenfield environment, okay, what you have all of your account or the portion of your account you're going to use for one of these services in cash, let's say. Let's say you sign up on a Monday morning and you've signed up to a simple long only SPY service. Okay, here comes the close. It's Monday. The service says zero, risk off. Things are looking a bit dicey. Okay, you do nothing. Let's say you're following it directly. Next day at the close, let's say things are stabilized in the machine's opinion and the machine prints a one, risk on. Okay, well, you could buy some SPY. But the first decision you have to make, of course, is, well, how much? So let's say you have, I'm going to say 10 units of capital, whatever that means in your world, but 10 units of capital you've decided are allocated to this long only SPY service. And you get your first risk on signal. What do? Do you buy 10 units? You might do. And the model, the back testing, by the way, assumes that you do. But most people would probably work in a more nuanced way. Most people would probably scale into a position. So you might buy 2.5 units, 5 units, something like that. And then signal the next day, let's say you get another risk on, you might then layer some more capital in. So your own personal implementation of the signals will differ somewhat from the pure backtesting and the pure live trade modeling that these services spit out. And that's okay. These services are not intended to run money for you. They're research services. They're there to help you improve your trading and investing. So that's the question of what positions do you already hold in what allocation? Okay, let's say that you subscribe to one of the rotation services. So the signal flow growth service does two things. It forms a view of the overall risk environment of the market, and it uses the S&P actually to do that. And if it decides that the risk environment is poor, negative, then it will say zero, risk off, which implies just sit in cash. If the model determines the market's in a risk on situation, which again means it thinks that the probability of a material correction is pretty low, then what it will do is it will look at a list of 10 or 15 growthy ETFs. So that could be QQQ, it could be IGV, it could be SMH, names you'll be familiar with, big liquid ETFs. And it will say, in the model's opinion, the top 3 to hold are these 3. So it might say, IGV, software, SMH, semiconductor, XLK, big tech. And so again, your question is, okay, what do? Do you take your notional 10 units of capital and split it a third between those, and then you've fully deployed, or do you only pick the top one, or do you apply a half allocation, and so you buy a sixth, a sixth, a sixth? What do? The model can't tell you what to do. This has to fit into your overall risk tolerance. What we do is publish periodically the outputs as to if anybody had followed the model's exact ideas. And these models, when they go one, it's basically everything on black, right? So if SPY goes to 1, it's basically the whole account in the machine's mind goes into SPY. If it goes to 0, the whole account comes out of SPY and goes into cash. And that's how the back testing is measured and modeled, and it's how the live trading record is traced. So when we publish back testing, when we publish the live trading record, it's an all or nothing basis. It's not nuanced by allocation. It's not nuanced by scaling into a position. It's not nuanced by any of those things. That's for you to decide. And again, the signal services we provide, they're risk signals. They're there to use in your trading decisions. And we have subscribers who follow them slavishly, including me. And I'm unashamed about that. If I take Bitcoin as a great example, as we know, there is nothing fundamental about Bitcoin. It doesn't have earnings. It responds to liquidity flows for sure. It responds to certain internal matters to do with Bitcoin itself. halving hash rates, all those sorts of things. And it responds to, obviously, ebbs and flows of demand and supply amongst large price setting Bitcoin investors and traders. Those things are opaque to me. I don't live in the Bitcoin world. And so what works for me is I think I'll just subscribe to a compelling signal service, and I'll do that, thank you. And it's worked out really well for me. And I don't really overthink it, to be honest. I have a set amount of capital that I notionally allocate to Bitcoin. And so if I get a risk on, I'm in. If I get a risk off, I'll sell it and come out again. Risk goes back on again. I'll take the exact amount of capital that came out and I'll put it all back in again to the IBIT ETF in my case. Some of the other services, I will use the long only SPY service. I do trade that directly, but I also use it as some backdrop information for how much risk in my own discretionary investing and trading do I feel like taking? So do I feel like going 100%, long? Do I feel like winding on some hedges, some inverse ETFs, or buying a few puts here or there? And so what these signal services are saying about the overall risk environment, that plays into my mind in those decisions in a just a pure input sort of way. I personally, as a user, I'm biased, of course, but I do find the services, all of them, extremely valuable. They're designed to be very low cost versus the value they can help you create, and they're designed to be very easy to use. All these things are early in their development. We're, I think, no more than 9 months into the oldest one, and we're launching new ones all the time. But we have incredibly rapid growth in these things in terms of number of people using them, the trading and investing performance so far that these things are generating, again, in model world, okay, where it's just a simple, all on, all off. Model world is not reality, but in model world, the model outputs are very compelling, and you can see those things on the various websites we use to promote these, and if you're a member, we share that data from time to time. And so they've been a terrific addition to our work. And again, just to go back, what I think is essential, probably always, but certainly in today's world, is to be able to use a mixture of fundamental, technical, and quantitative research. That, I think, is the key to having all the tools one needs to become a successful investor and trader. I just wanted to go through, I talked about this on a webinar last week, but I just wanted to talk briefly about how I personally use the 3 types of research. Each has their own merits. So fundamentals, on a day-to-day basis, fundamentals aren't that much use for making buy, sell, or hold decisions. So if NVIDIA margins are up a bit or down a bit on the earnings print today, is that going to lead you directly to a buy or sell decision? It shouldn't, in my opinion. Where fundamentals are really valuable is in edge cases, and more for buying in deeply broken markets, in my opinion, than selling in euphoric markets, because markets can become ever more euphoric and valuation multiples start to look, irrational pretty early in bull markets. And so if you sold on, average valuation ranges, then you'd miss a lot of a bull market. But buying great companies at super low valuations, particularly cash flow multiples, that's a great skill if you can develop it. So one of the best calls we've made in our work over the years is, we shouted and banged the table to buy Meta platforms at something like 7 times trailing cash flow in late 22. We published it. It's all over the internet. You can go and find it. And that to us was an absolutely screaming buy. At the time, you would pay 20 or 22 times trading cash flow for an ex-growth defense contractor, and you had Meta with all there is to like about it at a third of the valuation of a Lockheed Martin or a Raytheon. So that was a pretty obvious buy. And so those edge cases, in particular, buying deep value, I think that's the best place for fundamentals. Technicals. I like to use hedge trading in the index and 1 or 2 sector ETFs, and I find that technicals are the best way to do that. So if I look at short-term index movements over days and weeks, I find technical analysis is a really good tool for hedging. So, for instance, a couple of weeks ago, May options expiry was coming up. That's often a volatile time. Options expiry. We talk about another time as to why, but let's just accept that it is for now. The market was at a pretty elevated level coming into May options expiry, and I personally used, with some success, technicals to hedge my key index positions going into May OPEX, and then release those hedges thereafter, and made a little bit of money doing so. You know, fundamentals can't tell you to do that. We don't right now have we will soon, but we don't right now have a quantitative service that can provide hedging analysis. So technicals are great for me for that. And then quant signals I use as I've said, one, a pure direct act on the signal, all on black, all out and all in cash method, and I do that for IBIT. And then also, I call it a robot sidekick, which is just to keep an eye on what does a cold as ice machine make of the current risk environment, which would tell me something about if, for instance, I wanted to buy some of a particular stock heading into earnings, would I be minded to buy a lot of it or just a little bit? And some of that will be to do with the stock, and some of it will be to do with the overall market risk environment. That's pretty much what I wanted to cover today. The signal services themselves, before we launch into Q&A and discussion, I'll just show you where to find those. If you go to our website, which you can find at sestriancapitalresearch.com, then where to look for the quant services in two places. Quant/AI, you'll find the signal flow AI services there. And if you go to macro crypto, this is the YX Insight service. You can either subscribe for the whole service here, which again, you'll get signals on 7 or 8 instruments all in one package. Or if you scroll down, if you just want to buy the Bitcoin signal services, you can do this right down here. Yimin will be launching other single stock signal services over the course of the next couple of weeks, and we'll make it a little bit more obvious on the website about where to buy those as well. So two places to look, again, quant/AI and macro crypto on our website, sestriancapitalresearch.com. Okay, let's just go back to our presentation here, and then if we have any questions, comments, agreements, disagreements, anything at all, now's a great time. And please don't be shy. People always sit back, don't think they have great questions. All the questions we get on our webinars are terrific questions. I do encourage them. Prasad, hi, welcome. You have a question?
Hi, Alex. So I'm using the Signal Flow AI long short service.
Yeah,
So far, I've just been reading the messages. Once I took action on it, like when the model said risk off cash equivalent, I sold some of my existing stocks in QQ. The one I have is for yeah, it shows QQQ and SPY, right? So I sold some of my tech stocks and T triple Q. So, so question about it is like this model prints after the end of the day, right?
yes,
So for example, it printed on Friday after the close, right?
yes.
Risk on, and then there was a long weekend and the market open, right? So how do we act on this? Wouldn't it be better if the model prints it like start of the day or something like that, so that we
Yeah,
can
it's,
act for that day?
yeah, that's a really good question, Prasad. Let me deal with that. So Prasad's point is a really good one, which is some of our quant services, the signal ones, signal flow ones, print the signal at the close each day. And so his question is, well, how can you then act on it? So first of all, on that point, Yumin services print the signal in the morning. It takes a slightly different method, print in the morning. The ones that print at the close, this is what I do. Okay. First of all, I only apply them to the big liquid ETFs that they model. So it might, SPY, QQQ, one or two of the others. And in those ETFs, if you trade right after the close in post-trading hours, there's plenty of liquidity, except on a Friday. Okay, so if an hour after the close on a Friday, there's very little liquidity, and it doesn't take much to move the market. But you have to be writing pretty colossally large institutional sized checks in SPY, for instance, at 4 on a Tuesday afternoon to move the market. And so for me, I just set myself up. I use interactive brokers. I'm set up to trade outside regular trading hours. I know that not all brokers allow that, but in my opinion, if you use a broker which doesn't allow that, you're just costing yourself money. Okay, the ability to trade outside of regular trading hours is a colossal advantage that any um, investor who isn't an enormous insurance company. So, by which I mean any individual investor, most funds that aren't, mega funds, it's a colossal advantage to be able to trade pre and post market. Not in the small instruments, there's no liquidity there, but in the big instruments, there's plenty of liquidity. So the first thing I would say is um, most times, right after the close, one can trade with a reasonable spread and without moving the market. Um, Friday is an exception. And so uh, I personally make sure I'm going to trade on a Friday after hours. I make sure it's like 4:01, 4:02. So I act very, very quickly. And so, of course, if you have something else to do, if you have a proper job, hobbies, family, friends, any of that stuff, then that may not be possible. But that's the service design. The service is designed to model at the close. It is a limitation of the service. I understand that. We're thinking about how we could do it differently. I hope we'll come up with an answer to that. For instance, printing the signal a bit earlier in the day, we've looked at, and if we can back test that to our satisfaction, we might do that, but we're not there yet. Yimin signals print in the morning. Okay, so he models differently, and he prints in the morning.
Got it. Got it.
Uh,
Okay.
J-
Awesome. Awesome.
Jay just joined us, so but whoever's got there
Yeah,
seems to be
hey,
a
hey,
little noise in the background. Could somebody
hey,
go on
Alex.
mute? Thank you.
Hey,
Yeah,
Alex, this
Jay.
is Terry. Just a comment. All the back tests for the Signal Flow 2 are assuming you buy at the open the next morning.
Oh, I didn't know that. Okay, thank you. So,
Yeah.
folks, for those who don't know Jay is the creator of the Signal Flow models and series of services. So, if you couldn't hear that, what Jay said is the latest uh, incarnation of the model. We're on version 2 of the model in most services. The back testing assumes that the signal is printed at the close, but the trade happens the following morning. Okay, so I didn't know that, Jay. Okay, so that's your answer, Prasad. For any service that uses the 2.0 model, which is most of those services now, not long short yet, but it will do soon. That's your answer.
I see. So basically, you could act on it the next day based on the signals,
Yes, yes.
right? I see.
Again, back testing isn't reality, of course. It's back testing, but these models all back test pretty well, through pretty difficult markets. So again, backtesting isn't reality, but if we didn't have great confidence in the backtesting and the subsequent live trading performance of them, we wouldn't offer the services. So yes, the version 2.0, the backtesting says signal printed at the close, trade at the open the next day.
All good. So Alex, I had a subsequent question, but there is some background noise from someone.
So
I don't know,
whoever's got
someone
the
is showing.
background noise, can you go on mute, please? Thank you. Go ahead, Prasad.
Yeah. The other question was do you recommend? Like, I have a lot of these tech stocks. Uh, how do you interpret the signals from the signal AI long shot and also your charts that come, right? Uh, so I think the last week, some point of time, there was a signal saying there's a QQQ top and
Mm-hmm.
from your charts, right? Saying it looks like a top and
Mm-hmm.
SOXL also looks like a top and right. So I sold a lot of my positions, and after that, immediately I think the market changed. I think so, right? So how do we keep abreast of this, between the signal flow AI long shot and also your charts, right? H-
Well, then
every
they're not
day.
designed to they're not designed to coincide, right? They're different lenses on the same market. So I don't when I write up fundamental analysis of a company, or I produce a stock chart on an ETF or bonds or a single name stock, I don't pay any regard to what any machine is saying. It's completely independent analysis. So how I trade personally goes like this. Let's say it's QQQ, for instance. So I personally write up, I don't know, 20, 30 tech stocks. And so I'll have an accumulated set of knowledge about, in general, how are those growth companies doing? Is growth accelerating or decelerating? Are margins going up or down? Are balance sheet strengthening or weakening? About our valuations high or low, right? So that's sort of in the back of my mind. Okay. Then I will look at the technical setup on the chart according to my own analysis system, which is, it's not bad, it's not perfect, I make plenty of mistakes, but I get plenty of them right as well. So I'll look at, in my opinion, what does the chart setup say? And then I'll look at, from a trading perspective, I'll go, okay, what does the relevant machine service say? Now, if the machine service and the fundamental analysis and the stock chart that I've just drawn are all in agreement, as in positive or negative, but they agree, then I'll have a really high degree of confidence in what to do. So if I think, the tech sector's fundamentals are really strong and getting better, QQQ chart looks really bullish, and oh, by the way, I've got a risk on signal from the QQQ service over here, I'll think, okay, I'll sit back, leave some long exposure, and, things can change tomorrow, but I feel like I've got some good coverage here. If there's a disagreement, if my own chart looks really bearish, but the machine is saying nothing to see here, then you know, as the author of the chart, I might go, well, I think I might hedge a little bit. I wouldn't dump all my holdings because I had a somewhat bearish chart but a bullish machine, and I wouldn't double my holdings on the same basis. So in other words, I wouldn't overweight one or the other, but I will pay regard. And this is all, of course, a judgment call. That's where the nuance comes in. So just take a simple example. Let's say I've got a bearish QQQ chart, in my opinion. I've just drawn the chart. It's my brain working out whether I think it's bullish or bearish. So let's say I think it's bearish. Let's say I think that the fundamentals in tech are, okay to good, right? Not determinative, okay to good. I've got a bearish chart and a bullish signal. Then I might think, okay, well, if the market goes up, and I sold everything, I'm going to feel stupid. If the market sells off, and I had a chart that told me it was going to sell off, and I didn't follow it, I'm going to feel stupid. So I'll tend to take a non-binary decision. I might say, well, you know what? I'll put on a quarter hedge or a half hedge, or I might buy, a little bit of a longer dated puts, or some sort of way to make money if I'm wrong. That's the way I always think, which is, okay, my trading decision is to do X. If I'm wrong, how do I deal with that? How do I recoup some value? So that's how I approach it. It's basically, it's not a one or a zero. It's not a buy everything, sell everything. It's generally quite nuanced. And this is what I was saying earlier about, you have to feed these signals, any signals. Technical analysis is a signal, quantitative analysis is a signal, and earnings report is a signal. You have to feed that into your own decision-making process. That's how I handle it.
Got it. So, and can we use these signals, be it your daily charts that you provide from the Sustained Capital Search, and also uh, signal the signal flows A long and short service, right? Can we use these on individual companies? Like, for example, like if I expect just an example, QQQ, right? The signal flow is saying long QQQ today, right? Risk
Mm-hmm.
on. So, but example, like I say, Pinterest, right? So Pinterest, I
Mm-hmm.
think your after earnings report came saying like, okay, it is the chart is not looking good. It looks like it's going to correct, right? So it's going to correct. I think it was like 32, 33. You expected it to correct to 26, right? So,
I'll interrupt, Prasad. My own opinion is you can't read directly from an index signal service to a small cap stock, because Pinterest, QQQ doesn't know what Pinterest is, right? Um,
mhm,
uh, uh,
mhm.
it's a small cap, and so it will work. You know, if tech is selling off hard, so will Pinterest. If tech is rallying massively, so will Pinterest. But the linkage is
Right.
pretty weak. So if you want single stock signals, then just keep an eye on Yimin's work, because you'll see over the next couple of weeks that he'll launch signals for some of the single stock names. What you won't see is quant signals for any small caps. Okay, you'll only see it for the big liquid names, because in the same way that technical analysis works best with the big liquid names, because why? You're measuring emotion. You're not measuring, earnings or anything else. You're measuring crowd psychology and crowd decision making. And the bigger the crowd, the more liquid and larger cap the name, the better technical analysis works. And that's true for statistical analysis as well. So you won't see us launch a Pinterest signal, but you will see, Yimin in the YX Insight service, for instance, covers, Palantir, Tesla, Nvidia, because these are big liquid names and the price patterns they print are sufficiently high volume to be statistically relevant. But what happens in Pinterest is not suitable for this sort of modeling, in my opinion.
Got it. Got it. So you suggest basically don't look at the AI signal flows, signals to trade the small cap, right?
I think you
Just
can use it as a backdrop analysis. If signal flow is saying risk off in SPY, risk off in QQQ, right? Hold cash instead of bonds, then that's telling you that the machine thinks there's trouble ahead. And if there's trouble ahead, it's unlikely that a Pinterest or some other small cap is suddenly going to double, right? It's unlikely. It could happen, but it's
right,
unlikely. So you have
right.
to use these sort of shades of grey to make a decision.
Correct,
I'm
correct.
going to move
But
on, Prasad. These are fantastic.
sounds good.
Prasad, I've got to move on. I've got other people, but it's
All right,
fantastic
sounds good.
questions as always. Thank you.
Thank you so
Jose,
much.
you're on. Uh, Jose, do we have you?
I was trying to find
Lost
the
Jose.
microphone here.
Aha. Hey, welcome.
I have two questions. For the second one, I may have to ask you to go back to that chart where you have the two services. I joined a few minutes late, but let me ask the
Okay.
first one question first. I have the Signal long short version 1.0,
Yeah.
and I notice my question is this: sometimes, specifically, I remember May the 5th or one of those days, it went from long SPY to long QQQ. So does that mean that I need that one signal nullifies the previous one, or
Yes.
what?
Yes. So in that long short service, it uses four. There are five positions that the service can indicate to hold. SPY, so long the S&P 500, QQQ, long the Nasdaq 100, SH, short the S&P 500,
Yeah,
PSQ, short the Nasdaq, and cash. Okay, five things. So if it flips from a signal going, long SPY to long QQQ, then
right.
yes, if you just given the model some money to run and go on vacation, then what the model would do, let's say it controlled a trading account, the model would go, right, I'll sell everything, I'll sell all my SPY, and I'll use that money to buy QQQ. That's what the model would do.
Hmm. Okay.
And the reason
So,
it does that is it thinks the QQQ has a better chance, it has better prospects in its opinion than the S&P 500.
but
That's it.
yeah, but it doesn't mean that, for instance, in the case that the long SPY went to long QQQ, it doesn't mean now that the SPY is risk off.
Usually not, no. Usually not. So, I mean,
Just
there are
for,
going to be some cases in which that happens. But if you look as a matter of fact, if you look at how each of the models have made decisions, I mean, there probably is a day when it's been risk on in the Nasdaq
yeah,
and risk when but I can't think of it. I can't remember such a day. There probably was one, but in general, if the model is going, long QQQ, it's probably the case that long SPY will do just fine as well.
yeah, okay, I got that. Okay, the your chart, you had a chart with it had a little table under the YXI. That's the one
Yeah,
I think.
yeah.
Um, just a second, I need to zoom in. Yeah, on the this one you're referring to the long SPY, but the version 2.0. I guess the
On
question here is,
the on the
yeah,
left.
on the
Yeah,
left. The question here is the same one as I asked before, right? If one signal completely nullifies the previous one, assuming it's not a cache signal, it's just well, in this case, sorry, in this case, there's only SPY and cache, right?
yes, yeah.
Yeah.
That's right.
So okay, so no questions there. On the other one though, there's I wanted to ask you if one signal, let's say Bitcoin, nullifies the previous signal, or it's just
Yes, it
saying that
does.
this is the best among the others, but the others
No,
are
no,
not
these are
collapsed.
no, these no. Okay, so in this is the table on the right here. So anyone who's a member of Yumin's full macro service, Macro Insights, which is
Yeah,
terrific, by the way,
yeah,
um, you get this table every day. And no, this isn't a rotation method. This is a line of single stock and single ETF analysis. So this just says I can upgrade them. Actually, it's unfair to subscribers to share it, but basically, Bitcoin here this was I think this was this morning. So today was risk on, yesterday risk on. If tomorrow the model decides things are looking a bit shaky, it will go to zero. And again, the implication is that if the model was running your money, it would sell all of its Bitcoin holdings and hold cash.
yeah.
This
Okay,
isn't rotation. So this won't go sell Bitcoin, buy Apple. That's not how this works.
but it could be the case that you have more than one that is on one.
Oh yeah, I mean, no, yes. I mean, if for anyone who is a YXI subscriber, you'll see this chart today, and there'll be a mixture of ones and zeros across this board. Yes, absolutely. And so
Well,
again, this comes down to how do you choose to use these services? Do you have do you run an account solely um, uh, on these line items, for instance, and so do you
yeah,
switch those holdings on or off, or do you just use it as a particular input? What I think many people do here is, um, if I just use myself as an example, it's dangerous to extrapolate
yeah,
for oneself, but I don't have I have 10 years experience of trading Bitcoin, and I don't want to spend enough time going deep into the Bitcoin rabbit hole to make up for that lack of 10 years trading. So I like to use this as I'll outsource my decisions to this particular machine. And as it happens, because I spent my career in technology stocks, I'm pretty familiar with all the other names here. And I feel like okay, I can make my own decision for better or worse here. And I'll be right, I'll
mhm,
be wrong, but I can justify my decision. But if I knew nothing about tech, for instance, and I saw this thing called Palantir, which I didn't really understand what it did, but it was going to the moon. And every time I looked at it, I thought, that's too expensive. I'm not going to buy that. And it keeps going up. Then the, that's the perfect um, use case to use a quant service, which is, you know, the the model doesn't know about, the CEO sounding off about short sellers on CNBC. The model doesn't know about, um, the intertwining of the Palantir founder shareholder group with the current White House. It doesn't know about any of those things. It just looks at
yeah.
price patterns. And so it's a really great way. All these services are a really great way to just take all of the emotion and the embedded knowledge and information and disinformation out of the equation. Our models are going to be wrong, of course. They'll be right and they'll be wrong. And all we hope to do here, Yemen has a really nice approach. His view is, look, sometimes this signal is going to be wrong. Something will print one and it will go down that day. Of course, that's going to happen, but that's not what I'm trying to do. What I'm trying to do, says Yemen, is I want these services to deliver a better than buy and hold performance. And if we do that, then we've been successful. And I think it's a really nice way to think about it,
So there's
because
it is not unthinkable that all this uh, chart uh, could be all ones.
correct.
Okay, that's all I wanted to
Yeah,
know.
correct. And that's in part, there's obviously a fair degree of correlation between, these tickers here. Okay, so
Yeah,
if you put some energy stocks in there, for instance, then it's unlikely that they would all be ones and they'll be all zeros at the same time. If you put
yeah.
some financial stocks in there, ditto, you'd have some zeros and some ones. But these are obviously there's quite a bit of correlation between,
Okay,
if some of these names are going up, probably the others are as well.
okay. Thank you.
Great questions, thank you, and thanks for being a subscriber. Um, Anyone else, folks, before we finish up? If there's anything that we didn't cover that you hope we did, we're going to post the video on YouTube in a couple of hours. So please, if you're a current subscriber to any of these services, reach out in Slack. If you're not a subscriber, please have at it in the YouTube comments, or there's if you go to our website, I'll show you how to get in touch with us really, really easily. And we do read all these things. So if you go to our website and just go right to the bottom of any page, you'll see this button here, Ask Us Anything, and it'll take you to a contact form. So all you have to do is click Start, put your email address in, press Enter, and just type in whatever it is you want to ask us. We see them all, we respond to them all. We're pretty prompt about it. So please, please, please do reach out if you have any questions we didn't get to. I want to thank everyone for attending today. Jay, thank you for joining today. I can tell you're busy. Really appreciate you joining to explain that point. And thanks again, folks, for listening. And do reach out if you have any questions whatsoever. Thanks. Good night.